How many indicators should you put on your charts as a Forex trader? Let's talk about that and more right now. Hi Forex traders, Andrew Mitchem here, the Forex Trading Coach video and podcast 287. I'm going to talk about indicators, and most people use indicators in the wrong way, and most people over clutter their charts with indicators. They cause confusion, and when you start you like to see lots of nice arrows and lines and things on your charts because you think that's what you need to put on your charts in order to give yourself an understanding of what's happening in the market. Now, pretty much that's not true, but unfortunately that's the process and the journey that most people, including myself when I started, go through as a Forex trader. And you soon start to realize and discover that most indicators out there aren't actually much good. And you'd know, if you've been listening or watching me for many years, that you'd know that I generally say that I'm not a fan of most indicators out there. Lots of reasons why. The confusion side of things, they lag what's already happened. They tell you what's happened in the past. Most indicators don't really give you much of an indication of what's likely to happen. They all sort of make some form of average over what's already happened. Well, that's too late. People get confused with an indicator saying a buy on this time frame and a sell on that time frame, so that causes confusion. And also, when you actually look into the history of most indicators out there, is that most of them were written well before the mainstream Forex market was even, sort of people were using them on MT4 platforms, etc. So most of them were written for other markets than the Forex market. But then last week somebody wrote a comment on, I think it was YouTube, on one of my posts and said, hey Andrew, look, you're always telling us you don't like indicators, yet your charts here are full of indicators. What's going on? Really easy response and reply to that. Well, I find what I use useful. It's the software that I provide to my clients with my coaching course. But think about it this way. When you're driving a car and you've been driving for any length of time, you know how fast you're going, pretty much. You can tell what speed you're going, roughly, within a few kilometers. If you've got your lights on, you know you need your lights on because it's dark. But there's a light inside on the dashboard telling you that you've got your lights on or the beams on. There's a light in there telling you when your wipers are on. Well, you can see because it's raining and your wipers are moving. But there's still a light there telling you things like that. There's a line there, or a needle dial moving up and down with the revs that you're going through. Well, if you're revving, with your foot down on the pedal, you can hear that the engine's revving faster, or you're going uphill. So you kind of know that. If you're in, a manual car or an automatic car and you're changing gears, or it does it for you, you kind of know what gear you're in. You're open road cruising along at 100 kilometers an hour. You're probably in, top gear. But there's something on your car that tells you. Why does it do it? Well, it helps to give you an idea of what's happening. It takes the pressure and the workload off the driver, all things like that. And so really bringing that back to the Forex market and what you see behind me on the charts is no different. I've got things there that help give confirmation. I've got arrows on my chart that tell me what type of candle we've just had. Are we looking at engulfing candles, outside bars, pin bars, hanging man, those type of things? I can see those, but they help to take the workload off and help alert me to certain things happening on the charts. When I have round numbers plotted, horizontal levels, I can see that the price is stored at a round number. But by having it on there, it just helps to alert my eye. It makes things easier for me. I don't need to have it, but it helps to alert me. When I see divergence showing, I can see the divergence showing. But again, by having it plotted there in real time, and I get candle patterns happening at round numbers with divergence, it helps to make things quicker to scan through the charts and easier for me to get an idea of what's happening in the market. So that's why I have a certain number of indicators on my charts. Not because of absolutely necessity needing them, but because they make my life so much easier, and that's why I provide them to clients. The only thing that I have that I really would struggle to use without having this indicator is the pivot point and support and resistance levels. Now, traditionally, many years ago, you'd have calculated all those figures and plotted them on your charts each day. Now, I don't want to do that, so my software does that automatically for me every time the new day changes over, and it plots them on all different time frame charts. Again, yes, I could go and do that manually, but why would I when the software can do it automatically for me? So when you hear me saying, well, I don't like most traditional indicators, that is still true. However, I don't trade completely blindly or naked trading, as some people call it, when all you're doing is seeing like the price or just the candles are showing, because to me you do need a little bit more. So indicators are important if you use a select few that work for you. I've found over the last 15 years that I've stuck with the same ones that work really well for me and with thousands of clients all around the world. And that's because that helps me to say, well, this candle pattern that I'm looking for, what part of the chart is it in? Where's it bouncing? What's happened previously? Do we have divergence? Are we overbought, oversold? All those type of things. Where can we put our stop loss to give us a good safe level? Is there room to move to our profit target? All those type of things, and that's the way that I like to use the select few indicators that I have. So I hope that helps. Don't go cluttering your charts with like all sorts of combinations and moving the parameters and things of indicators, because it generally leads to confusion. And you've heard the phrase analysis paralysis. You're sure to get that if you put too many charts or too many different indicators on your charts. Just stick to a few basic ones that really help you with your strategy. So that's the important key. So this is Andrew Mitchem, the Forex Trading Coach. I'll see you this time next week.